This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Hello, this is Hall Martin with Investor Connect. Today we're here with Abby Levy, co-founder and managing partner at Primetime Partners. Primetime Partners are an early-stage venture capital fund that invests in and builds from the ground up companies that can transform the quality of living for older adults. They support the founders and organizations that create meaningful new products and services and experiences in the underserved trillion-dollar global sector of aging. They accelerate business growth through their direct-to-consumer marketing expertise, their strategic distribution partners, synergies across portfolio companies, and an engaged network of advisors. Also core to their mission, they unlock the talent and expertise of experienced older adults as founders and business builders. Abby, thank you for joining us.
So glad to be here. Thank you for having me.
So what was your background? What did you do before you started investing in early stage companies?
Well, I've had a few different roles in my life, but most recently was a founder myself, starting a business called Thrive Global with Ariana Huffington. But prior to that, had really focused my career on marketing and business growth as an advisor, working at McKinsey & Company, and then as a product manager at OXO International. So pretty much all of my experiences have been around business growth. And most recently, when I was an executive at SoulCycle, I started a personal project, which involved kind of figuring out for my parents how they could spend their time. They're both retired, and it began this kind of exploration of what happens life post 60. And to be totally honest, I was really dismayed that there didn't seem to be a lot of alternatives for how older adults could meaningfully spend their time, especially if you're not in the 1%. And that kind of exploration led me to start to come up with some of my own business ideas for different products, services, and experiences for older adults who I viewed to be a very much ignored and underserved market. Even though they're 25% of our, soon to be 25% of our population, 2/3 of our net worth, and the majority of our healthcare spend in our country. And as I started to write these business plans myself, it dawned on me that really we need to build an entire ecosystem of new businesses that serve this audience. And that's where the idea for Primetime was born, which is to be the catalyst for founders to enter the space and to build meaningful businesses in the space.
Great. So what excites you right now?
I get asked all the time the impact of COVID on the fund. And just as a bit of a context, we launched the fund during COVID. We fundraised and raised $50 million during COVID. We've made 9 investments during COVID. So COVID has definitely, and working remotely has been something that is as tragic as it has been for the world at large, for the sector of aging. It has really cast a light on, what happens to older adults, particularly those that are living in senior living facilities. The reason I bring this up of what excites me is that the main thing that actually excites me is that there's so much more attention now than pre-COVID on the sector. And what that means is you have the attention of large enterprises like employers and payers and the government who are much more eager to innovate and invest in innovation and work with startups. And on the other side of it, you also have a lot more talented entrepreneurs entering the sector. So at a high level, what excites me is the momentum in the sector. Specifically within the investment themes, we have several delineated investment themes. And the way that I think about the landscape is, we align with what older adults care about. They care first about their health, second about financial security, and third about having meaningful experiences. The implications of which is we make investments across health tech and services, fintech and fin services, and consumer tech and consumer services. And so within each of those sectors, there's certainly different themes that resonate. And I'm happy to go into detail on any of them. One's around aging in place, behavioral health and wellness for older adults, longevity health. Our body as we age is naturally declining. Alzheimer's and dementia is a perfect example of that. Within financial services, 50% of Americans are going to run out of money because our longevity has extended beyond our bank accounts. And so there are a new crop of new financial services and products that deal with both asset decumulation, but also innovative revenue sources for older adults. And on consumer experiences, there's a big push around, combating social isolation. A third of older adults live alone, and that number is going to be increasing as longevity pushes that number, pushes the age span out. So those are some areas that we're really excited about. Really looking for entrepreneurs ready to tackle these big issues.
So, what's your advice for people investing in startups in this sector? What do you tell them to do before they write that check?
I think that there's the common advice for anyone interested in early stage investing, which is around team and innovative product and market size. Those three things, taken as a given. Some of the things I've learned, and we've only been at this 6 months, so take it with a grain of salt. But some of the things I've learned is that people typically talk about seniors as if it's one monolithic group, seniors. Once you hit 65, you're just a senior. And what's fascinating about this space, and actually if you look sociologically, the older you get, the more unique you are. And so the heterogeneity of the space is really a hallmark. And so to investors, I would say, whatever product or service or technology is targeting the senior, it cannot be a blanket statement for everybody because there is no one size fits all model. It's a very heterogeneous group. Make sure that the investment you're making really is speaking to a cohort and it's really resonating with that group. And so that's one thing I would say. The second thing I would say is don't be scared of direct to consumer. I think to date, almost most of the startups out there, with the exception of maybe GreatCall and Care.com, have been focused on either an enterprise client because they think VCs want to see SaaS models and recurring revenue models. And so, they're nervous to look at direct to consumer as a model. To my point around the heterogeneity of the market, there are a lot of consumers in this market. You've got consumers that are differentiated based on their technology or digital savviness. We've got, for myself, my parents are in their 80s, you've got the adult child, you've got other family caregivers. So there's a lot of different consumers to play around with. And so I guess my second piece of advice is to not be scared off of if there seems to be a really compelling acquisition model around going direct to a consumer versus having to go through a health plan.
And then on the other side of that table, what's your advice for people running startups in this sector? What do you tell them to do before they go out to raise funding?
Again, there's the basic, what you need to do to show up to get venture money in terms of team, product defensibility, product market fit, TAM, all of those things. But I think specifically in this sector, because, and this is a gross stereotype, but there's so much trust that particularly for the older adult consumer, and whether it's B2B2C or B directly to the consumer, trust is very important. So how you build a brand to embody trust is very, very important. I think oftentimes brand is one of those things that entrepreneurs decide to invest in year 3 of their product. And it's kind of it's an afterthought. And I would just say brand and trust is something I would really think about for this market is point one. Point two is really around affordability. You have to remember that this is a consumer or a market with fixed or declining income. And anything new, really, you need to think hard about, the fact that this market is shifting. While people talk about the affluence of this generation, there's just an increasingly large middle. The perfect example is one of our portfolio companies, Retireable. There's 50 million Americans without a financial plan, without a retirement plan. And those 50 million Americans fall beneath the assets under management to be interesting to like a Fidelity or a Schwab. And so it's that middle of the market that is very, very appealing and that is only increasing as older adults decumulate their assets. So I think that'll be another thing, which is look to the middle. And then the last, I don't know if it's advice, but to date, one of the largest players in the sector has been the government and nonprofit community-based organizations. Those have been the entities that have tremendous amount of funding from the government and from other sources to support our seniors, and their daily living. There is no playbook that you can apply for kind of like a typical digital startup for this sector and to think about all the other stakeholders who, by the way, may be government related.
So let's talk about the state of investing in this aging industry. How do you see investing changing at this point? How do you see the industry evolving to take care of that?
I get asked this a lot, which is people say, wow, this is such a novel idea to have a venture fund focused on older adults. And my response to that's typically been the demographic shift has been a data point that any investor has been aware of. So if you look at any health tech firm, fintech firm, consumer tech firm, they'll typically in their investment themes have a bullet point with silver tsunami or aging tech or gray tech or whatever it might be. And so it's been an area that investors have known is coming because of just the sheer demographic shift. That said, I think what you're going to see at this point, and the reason why we built an early stage fund, is there's just not enough supply of great companies yet. And so I think what you're going to see is you're going to see a lot more investors placing bets in this space because it's such a new area for entrepreneurs to be focused on. And I think that you're going to see a lot of testing and learning. You're going to see a lot of corporate venture, and the payers themselves all have venture arms. They're all experimenting and investing. So there's a lot more, I would say, corporate activity. When I talk to large financial services firms, whether it's Northwestern Mutual or Nationwide or Mass Mutual, they're all creating incubators or investment funds where this is a theme. So I think you'll see increased corporate venture. Already corporate venture is playing a role in this space.
What do you see as the biggest change that's coming up in this time frame?
I think technology in the home is going to be something that moves as the penetration of smartphones and tablets increases. Technology in the home is going to change. And that's because if you look at broad trends of what's going on in healthcare, healthcare at home is changing. And part of that was accelerated by COVID with the use of telemedicine tripling and the majority of Americans, frankly, for the first time using telemedicine. But I think technology overall in the home is something that today's seniors at age 60, 65 are digitally native. And so they have spent their working careers using technology and they expect it for the rest of their lives. So I think that penetration of technology over the next 10 years is dramatically different. So that is one area. And then I think the second area is, one of the statistics I like to cite is that recently the World Health Organization came out with a study that said 50% of people in the US born after 2007 will live to be 100. In other words, in a couple of decades, 50% of our population will be centenarians. And that is a huge change from a consumer experience. When lifespans were in the early 70s, you didn't try to figure out what am I going to do at this time. And now we have a very long third chapter, 3 decades worth of life that is unplanned for. And so what that means in terms of experiences, real estate, travel, work opportunities, all of that has to be filled in. And so I think in addition to technology that treats older adults as digitally native, as they will be shortly, I think a second area is going to be the experience economy applied to the older adults.
Great. So you mentioned a moment ago about your fund and what you invest in, but can you tell us in more specific details, what is your investment thesis for this sector?
Again, it's hard because we're in multiple industries between healthcare, finance, and consumer. An umbrella thesis would be that the issue isn't about creating new technologies, new inventions that haven't been created. It's really about the application and engagement of those technologies to this audience. A perfect example is in the wellness space. Everyone in healthcare has been talking about social determinants of health and behavioral health and wellness. And if you think about most of the digital businesses, even take Peloton or several of the mental health apps, all of these things have been designed for are marketed to a younger audience. Seeing the picture of the, fit man and woman in their workout gear is not necessarily the right messaging to attract, someone in their 70s who may have a chronic condition or two to get them excited about, in this case, fitness. And so I think one of the things that we're most interested is how are people using existing technologies, but most importantly, navigating the conversation with older adults to really engage them, to speak to them, to design for them. And I'm not just saying it's only about marketing, because given that's my background and my proclivity, but it's also just around how are businesses showing or able to prove engagement, because that's been the missing link in this sector to date has been engagement.
You mentioned 1 or 2 startups that fit that thesis?
Yeah. So, one of the startups that we invested in is a business called Get Set Up. GetSetUp.io is the website. And what they do is they provide live video learning enrichment for older adults. It's basically small Zoom classes taught by a peer and other older adults on a range of topics. And what they've been able to do is to use an existing technology, Zoom, and make the process so accessible to older adults in terms of having a customer service number you can call if you need help getting on Zoom and how to use the product, by having it be a community of peers, and by then also having classes that teach older adults on how to use technology. And so what they're finding is that their audience is coming back several times a week to take more classes. And that kind of stickiness and engagement is something any entrepreneur would kill for. And they're finding it because they're meeting their target audience where they are and bringing them along. And so that would be one example on engagement. A second is a business we've invested in called Carewell. Carewell.com is a destination for purchasing your home health supplies. These are items that you need, for example, if you have incontinence and need adult diapers, kind of your everyday needs if you are caring for a loved one who has certain health needs, or for yourself. And what they found with engagement is really they lead with empathy. And the empathy is the job of being a caregiver, if you yourself are the ones that need the home health supplies, that it's a very challenging, concerning, stressful time. And so they engage with empathy in terms of the content they provide, the customer care support teams that are all former caregivers themselves. And they have developed this loyal following and customer base when, let's be honest, this audience could go to Amazon, but they don't. They stay with Carewell because of the service that Carewell provides.
So, in this new space with aging and so forth, what are the challenges the startup faces in launching? What do you see something unique about this space that makes it difficult for the startup?
I think it's the same. It's the opposite of the opportunity, which is really around acquisition and marketing. The startup typically is either selling to a health plan or a payer or a large enterprise who typically wants to do a pilot to prove ROI and efficacy. And that's just a long lead time process. So that distribution is the challenge on the enterprise side. And its acquisition is the challenge on if it's a direct to consumer business. And in both of those cases, I do think, and that was my point earlier around how COVID is accelerating this sector, I think that the distribution channels are a lot more eager to try innovation, which is fantastic. And I think the consumer, particularly because the consumer is now, everyone's at home. They're doing a tremendous more activity on Facebook, which is, 25% of users on Facebook are older adults. It's the fastest growing audience there. And so they're spending more time looking for content. So it's actually a great time to experiment with direct to consumer acquisition for this audience.
Then same for the investor. What are the challenges an investor faces in trying to invest in startups at this stage in this time frame?
The challenge is it's not specific to this industry. I think the point I would make is that most venture investors have certain KPIs or thresholds on what they expect to see from a business they invest in. And I think because this is such a new sector and people are still learning as we go, they're going to have to be more flexible on what some of those KPIs and thresholds are. They're going to have to take some leaps of faith that these startups are building for what is to come, not what exists today. That sounds kind of obtuse. I think what I'm saying is that there's going to need to be a higher risk tolerance for this sector because there's so many things that are not proven yet. It's like, people would always talk about this is the Uber of blank. There is no analogous unicorn that's ever been created in this space. So therefore, you have to take a leap of faith without relying on precedent.
So you mentioned several subsectors and applications that you're going after. If you had to pick one that's just a good immediate opportunity for investors to pursue, which application would you call out?
That is a great question. I think anything around it's digital health that focuses on wellness or social determinants of health, like fitness, nutrition, mental wellness, sleep, all of those things that the older adult has more control over, and the preventative side. And the reason for that is just that the health plans who the risk-paying providers, they bear the burden of this burgeoning and blossoming healthcare expense. And so I do think there's an appetite right now to test and learn in that space. And so I think that's a very interesting space to spend time in is really this whole behavioral health. Yeah.
The last few minutes that we have here, what else should we cover that we haven't?
If you have any listeners who are working within existing businesses, how they can take what they do and reach this audience. Because one of the fastest way to serve this audience is to take existing products and services and figure out how to reach this audience versus always designing new ones. So I do think there's the opportunity for, I guess I would say, corporate innovation in addition to startup innovation. I would also say that this is a global issue. The U.S. population is forecast over the next 20 years for 25% of the population to be age 60 plus. In China and Japan, that's over 30%. And so, looking overseas to see what innovations there are in those economies. And then as a startup, thinking about designing your business, not just for the US market, which is pretty typical of Americans, design for America, to think global sooner.
So how best for listeners to get back in touch with you?
They can reach me at Abby, ABBY, at primetimepartners.com. Send me a note with ideas and, whether that's to co-invest if you're an investor or if you're an entrepreneur to get feedback on your idea. And ultimately, if you, want to join as an investor in our fund, we will be looking to fund too in just a short while.
We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Great. Thanks for the time. Wonderful to chat.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.